So what is revaluation account? So it is an account which is prepared in order to record increase or decrease in the value of assets and liabilities. Assets should be sold and whatever the amount comes to the business, so that amount will be used for payment of liability. In partners capital account, in admission as well as retirement, what we have done? We have distributed among the partners. This realization account comes often and often in your bank account, so you have to record why this transaction have taken place. So if you record in the Hello everyone, welcome back to the second session of the chapter Dissolution of a Partnership Firm. I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, Temple of Excellence, Mysuru. My dear students, in a previous session, we have discussed theory part of this chapter. So we learned what is the meaning of dissolution of a partnership firm. It's nothing but closing down of partnership firm, and under what situations or under what circumstances this dissolution takes place, and also we learned the difference between dissolution of a partnership as well as dissolution of a partnership firm. So in today's session, we shall directly go through a 12 marks problem, because from this chapter you can expect 2 marks, 1 question and 12 marks, 1 question. So total 14 marks from this chapter, and for 2 marks you might ask a simple theory question, or they might ask a simple journal entry. So if you know how to solve 12 marks problem, it is very easy to write the journal entry. And for 12 marks question, so here what are the accounts to be prepared during dissolution of a partnership firm? And this is a very compulsory or very important as well as compulsory question which can be asked for 12 marks. So here we have to prepare what are the final accounts to be prepared during dissolution of a partnership firm. Now we shall see how we are going to solve 12 marks problem. What are the accounts to be prepared? So, accounting procedure on dissolution of firm. So, what are the accounting procedure to be made during dissolution of a partnership firm? So, in order to close the books of accounts on dissolution, the following accounts are opened. Now, let us see what are the accounts to be opened during dissolution of a partnership firm. Whereas in admission, what are the accounting procedure or what are the accounting statements or accounts to be prepared? That is revaluation account, partners capital account as well as balance sheet. Whereas here we are going to prepare realization account first. So first account to be prepared under dissolution of a partnership firm is realization account. So we shall discuss in detail what is realization account. Next is partners loan account. So we have to prepare partners loan account also. Certain times, so if they have not asked directly to prepare partners loan account, so no need to prepare. And the next one is partners capital account. So here also like admission as well as retirement, so we have to prepare partners capital account. And the next one is cash or bank account. So here instead of preparing balance sheet, we are going to prepare cash as well as cash or bank account. Now, why we are not going to prepare balance sheet? Because we are not going to continue the business. So, the firm is going to end, right? So, we are not going to prepare balance sheet. So, we'll settle the accounts of the partners by preparing cash or bank account. So, these are the accounts to be prepared during dissolution of a partnership firm. Now, let us see the first account, that is realization account. So, here my dear students, you have to remember, so there is a difference between revaluation account as well as realization account. So, what is revaluation account? So, it is an account which is prepared in order to record increase or decrease in the value of assets and liabilities, right? So, it is prepared during admission, retirement as well as death of a partner. Now, what is realization account? So, it is an account prepared during dissolution of a partnership firm. Now let us see what is realization account. A realization account is opened for disposing of all the assets of the firm and making payment to all the creditors. It is nothing but payment of liabilities. Now under dissolution what happens? So you can imagine a picture here. So what happens during dissolution? So we will bring all the assets together. So we will bring all the assets together in one side. We will bring all the liabilities together in the other side. Clear? Now, we will sell this asset. So we will sell this asset. So when we sell this asset, what comes to the business? So we will get cash, right? So we will get the amount when we sell the asset. So here, what happens during dissolution? So we have to take into consideration all the assets. So we will keep all the asset at one side and we will keep all the liabilities in the other side. Now we will sell the asset. So when we sell the asset, cash comes to the business. Now cash is in our hand, right? Using this cash, we will pay this liability. So using this cash, we will pay the liability of the business. So this happens in dissolution. So after, now how to pay the liability? First we will pay outsiders liability. So first thing we have to remember is, first we have to pay outsiders liability. So whatever the amount which is got by selling the asset, so first we will pay the outsiders liability. After paying outsiders liability, if any amount is left, then we will pay partners loan. We will pay partners loan. After paying partners loan, if any amount is left, then we will pay partners capital. We will pay partners capital. After that, we will distribute. So after paying all this, if any amount is left, then that amount will be distributed among the partners in their profit sharing ratio. So we will distribute that amount. Distribute the amount among all the partners in their profit sharing ratio. Once again, I will repeat what happens in dissolution. We will bring all the assets together. We will bring all the liabilities together. So we will sell the asset. So we will get the amount. We will pay the liability. Now how to pay the liability? First, what we have to pay? We have to pay outsiders liability. In the sense, the amount which has to be given to the outsiders. So after paying outsiders liability, if any amount is left, then if any partner has given loan to the organization or partnership firm, that has to be settled. After settling partners loan, next we have to pay partners capital. So you know, each and every partner will contribute capital into the partnership firm, right? So we will return that capital. After that, if any excess amount is left by paying all these above things, so if any amount is left, so it will be distributed among the partners in their profit sharing ratio. So this is a clear picture about dissolution of a partnership firm. Now, why we are preparing this realization account? So realization account is prepared in order to sell the asset. So under realization account, we are going to record the assets. We are going to record the liabilities. We will sell the assets. We will pay the liabilities, and whatever the amount which is left, it may be realization profit or realization loss. So that has to be distributed among the partners in their profit sharing ratio. Now let us see. Realization account is a nominal account, and the object of such an account is to find out profit or loss on realization. So what is the main intention of preparing realization account? So after payment of all these items, all these debts, so if any amount is left, so it is profit or loss on realization of assets and payment of liabilities. So this is a first account which has to be prepared under dissolution of a partnership firm. And the next account is partners capital account. We shall discuss in detail. Next is partners, or the next account is partners loan account. After that, partners capital account. Next is cash or bank account. So we shall solve a problem so that you can clearly understand how we are going to settle the accounts of the partners during dissolution of a partnership firm. Now, this is a 12 marks problem which is asked in the year 2019, that is March 2019. Very easy problem. You might feel that it is quite lengthy. Only thing is that you have to be very careful while preparing realization account. Rest all the accounts can be prepared very easily, and your partner's capital account is similar to your partner's capital account which you have prepared during admission retirement chapter. Clear? And next, last account to be prepared is cash or bank account, and certain times or in certain situation they might ask to prepare partners loan account. So this is also very easy to prepare. Now we shall go through a problem here. Rekha and Chetana sharing profit and loss as 3:1. Now who are the partners here? Rekha and Chetana are partners and they have decided to share their profit and loss in the ratio 3:1. So they are profit sharing ratio and they agree upon dissolution. So they have both have decided together and they have agreed to dissolve the partnership firm or close down the partnership firm. The balance sheet as on 31st March 2018 is as under. So they have given balance sheet and we shall see what they have given in the balance sheet. So balance sheet of Rekha and Chetana as on 31st March 2018. So they have given balance sheet during dissolution of a partnership firm. So we are having certain liabilities, amount, asset and amount. Now let us see what they have given under liabilities. Here they have given loan. So they have not given, here my dear students, you have to be very careful. First when they give loan, you have to see whether the loan is of the partner or outsider. So here they have just given loan. So loan in the sense, it is nothing but outsider's loan. Clear? For example, suppose it is partner's loan, they would have directly given Rekha's loan or Chetana's loan. Here just they have given loan, it means that it is a outsider liability which has to be paid, right? So loan. Next is creditors, it is also a outsider liability which has to be paid back. Next they have given capital of Rekha and Chetana under liability side. Now coming to the asset side, we are having cash at bank, stock, furniture, debtors, plant and machinery. So this is a balance sheet and the next they have given certain adjustments. So we shall go through the adjustments here. So the first adjustment is Rekha took over plant and machinery at an agreed value of rupees 12,000. Now what happens here, during dissolution of a partnership firm, certain assets will be taken by the partner itself. For example, if a machinery is there in an organization, so a partner might take that machinery during dissolution of a partnership firm. So that also we have to record while preparing final accounts during dissolution of a partnership firm. Now the first adjustment is Rekha took over plant and machinery. So the sentence itself tells that, so there was an asset, that is plant and machinery. Now Rekha have taken over that asset. Now we shall see later how we are going to adjust in our final accounts. And the next one is stock and furniture was sold for rupees 8,400 and 2,780 respectively. As I told, so what happens? Asset should be sold and whatever the amount comes to the business, so that amount will be used for payment of liability. Here what they have given, they have told that stock and furniture was sold and they have given amount on which price they have sold that asset. And the next one is debtors were took over by Chetana. Now here also Chetana, debtors is an asset. Here an asset is taken over by a partner. And the next one is liabilities were paid in full by the firm. Now they have sold certain asset like stock as well as furniture, right? So using that amount, what they did, they have paid the liability. Now realization expenses were rupees 320. Now what is this realization expenses? So during dissolution of a partnership firm, it is a long procedure, right? So there also certain extra expenses takes place which is known as what? Realization expenses. In the procedure of selling asset as well as payment of liability, there are certain procedure, right? So during that situation, certain expenses takes place which is known as realization expenses. So we have to take into consideration that also. And they have asked us to prepare realization account, then partners capital account and bank account. Now this is a question. Now we shall go through the solution. I'll explain in detail how we are going to solve this problem. Now, how to begin our solution? With the heading realization account, because we have to prepare realization account, partners capital account as well as cash or bank account. So in this problem we are going to prepare bank account. I'll tell why we are going to prepare bank account. So how to identify whether we have to prepare cash account or bank account, I'll explain in detail later. Now this is a realization account. And the format is you will be having debit side as well as credit side. And a debit side particulars amount and a credit side particulars amount. You will be not having a date column. Why? Because dissolution takes place on a particular date, right? So no need of date column here. Yes. So on the debit side, the first thing what you have to do is you have to bring all the assets together. As I told, we have to bring all the assets together except cash or bank and profit and loss account. So we have to see our balance sheet which is given in the question, and we have to transfer all the asset except cash or bank and profit and loss account. Now why cash or bank should not be taken? Because we are going to prepare cash or bank account, right? So there we will take that cash as well as bank. And profit and loss account, so in partners capital account, in admission as well as retirement, what we have done, we have distributed among the partners. Here also in the same way we will distribute among the partners. Now we will transfer all the asset except cash or bank as well as profit and loss account. Now go through the balance sheet. Now cash at bank, here we are not going to transfer under realization account. So we will take in cash or bank account later. Next we will transfer stock, we will transfer furniture, we will transfer debtors, we will transfer profit and plant and machinery. Because there is no profit and loss account here, no need to worry. First we will take all the asset one side except cash or bank, profit and loss account. Now we will transfer the same thing, since it is there in the asset side, will transfer or will bring them to the debit side of a realization account. Now here under debit side, we have recorded the same amount what is there in the balance sheet, that is 2 stock 9,000, 2 furniture 3,200, next 2 debtors 14,000, 2 plant and machinery 10,400. So we have bought all the assets together. Next, we will transfer all the liabilities and under liabilities, we have to transfer all the liabilities except general reserve or any other fund. Next, profit and loss account. Then if there is any partner's loan, and partner's capital. Partners capital. So we'll transfer all the liabilities except these items, that is general reserve, fund, profit and loss account, partners loan. And in partners loan you have to be very careful. If they give the loan of the existing partners, then we shouldn't take, if they have given outsiders or the loan of outsiders, we have to take into consideration. Next, partners capital. So we will not take under realization account. Now we shall transfer all the liabilities. We shall see the liabilities and we shall transfer. And the first one is loan. So as I told, it's an outsider liability. So we have to take into consideration. Next is creditors. So it is also outsider liability. Next, they have given capital. So this capital is not taken here, will take in partners capital account. Now we shall see how we have recorded under realization account. So under credit side, so assets are recorded under debit side. It's nothing but we'll bring all the assets together. Next we'll bring all the liability together, that is outsiders liability. That is by loan 2,400, next by creditors 3,600. Now we have bought all the assets, we have bought all the liability. And a third step is we have to sell asset. Sell all the assets. Now, when you are selling the asset, what comes to the business? Cash comes to the business. So, your journal entry will be cash account debit to realization account. So, why you are debiting cash account? Because cash comes to the business, right? So, we will debit cash account or bank account. Now, how to record cash or bank? So, how will we come to know whether we have to record cash account or bank account? For that, now see the balance sheet here, they have given cash at bank. then we will take it as by bank account or to bank account. Clear? So we'll consider the word bank. Suppose they have given just cash, then we'll take into consideration cash, by cash or to cash. Clear? Yes. Now we will sell all the asset. So when you sell the asset, as I told, cash comes to the business. So here in the balance sheet they have given bank. So we'll record it as by bank account, where in the credit side. So we have recorded asset in the debit side, we have recorded liability in the credit side. Now we are selling the asset, so we'll record it as by bank account. Why we have recorded it as by bank account? Because we are selling the asset. Now, for this, we have to see our adjustment, because they have sold certain asset and certain asset have taken over by the partner, right? Now, here there is 4 assets, right? Now, see the adjustment. Stock and furniture was sold for rupees 8,400 and 2,780 respectively. In the sense, these 2 assets are sold, right? So, we have to write the amount which on which they have sold. So, how we are going to record? We'll record it as by bank account. Stock, how much? 8,400. So, it is sold at a price of 8,400. Next, furniture they have sold at a price of 2,780. So, total 11,180. Now, we are done with stock as well as furniture, right? Next, there are 2 more assets. Now, let us see what they have done with this asset. Rekha took over plant and machinery at an agreed value of rupees 12,000. Now, what is a journal entry? When an asset is taken over by a partner, partner's capital account debit to realization account, because that asset is taken over by a partner, right? So, we have to debit her or his account. Now, what happens? Rekha took over plant and machinery. So then how we are going to record? Under credit side, we will record it as by Rekha's account. Now we shall see how we have recorded. This is for what? By Rekha's account. Here plant and machinery is taken over by Rekha. That is by Rekha's account, plant and machinery taken over. So what is the amount? 12,000. On which amount they have taken over, that amount we have to record. Now moving on to the next one, debtors were took over by Chetana. Then how do you record? By Chetana's capital account. Clear? By Chetana's capital account debit to realization account. Now debtors by Chetana's capital account, debtors took over. So we are done with all the assets, right? So by Chetana's capital account, 13,000. Now let us see what are the other adjustments. Next, liabilities were paid in full by the firm. Now we are done with all the assets. So we have sold the asset, we have written it as by bank account, and there were all the assets were not sold. Certain assets were taken over by the partner. So we have transferred to their capital account. Now we are done with all the assets. Next, we will pay the liabilities. So we have sold asset and we have recorded taken over also. Now we will pay the liability. Which are the liabilities to be paid? That is 2 liability, that is loan as well as creditors. Right. Now we shall see the adjustment. Liabilities were paid in full by the firm. Now when the liabilities are paid, what goes out of the business? Cash goes out of the business, or cash or bank goes out of the business. So we are going to credit cash or bank. Now how to record this for payment of liability? To bank account. That is for payment of liability. Next, which are the liabilities to be paid? It is loan as well as creditor, and in the adjustment they have directly told that they have paid all the liability. That is loan as well as creditor, they have paid full. So since they have not given the amount here, they have not given the amount, but they have told that they have paid in full. In the sense, same amount. How much? Loan is 2,000 to be paid. They have paid in full 2,400. Next, creditors 3,600 they have paid in full. Now we will total the amount and we will write 6,000. That is payment of liability. Now there is no other liability, in the sense no other liability, and in the adjustment also they have not given if any liability is taken over by the partner or not. So no need to worry. So here also there is no liability which is been taken over. Let it be like that only. After that, we have to see the adjustment. Realization expenses. So we have recorded liability were paid in full. We have recorded debtors were taken over. We have transferred to partner capital account who have taken over the asset. Next, stock and furniture we have recorded. Rekha took over. We have recorded. Next, the last one is realization expenses. So as I told, during dissolution, so there are certain expenses which takes place. So that is known as what? Realization expenses. So when the realization expenses is paid, what is the journal entry? Realization expenses debit to cash or bank account, right? Here we are going to record it as bank account. That is to bank account, realization expenses 320. So we are done with recording all the entries here. So what you have to record first? First we will transfer all the assets to the debit side except cash or bank as well as profit and loss account. Next, we will take all the liabilities together from the liability side of the balance sheet except general reserve or any other fund, profit and loss account, partner's loan as well as partner's capital. So we are done with these two items. Next, we will sell the asset. So to record that, we have to see the adjustment. So they will give it as assets realized. So realized is nothing but assets sold. So we have to record it as by bank account for selling of assets. So whatever the assets they have sold, we have to record and the same amount has to be recorded. Next, after that we have to see whether any asset is taken over, because here there is 4 assets but only 2 assets has been sold. So remaining 2 assets is taken over by whom? By partners. So by seeing the adjustment, we'll come to know which asset has been taken over by whom. So here by Rekha's account, plant and machinery, she has taken over. So we will record it as by Rekha's account 12,000. Next, by Chaitana's account, she has taken over debtors. So by Chaitana's account 13,000. Clear? Now we have sold the asset and we have recorded the transaction for asset taken over. Next, what you have to do, we have to pay the liabilities, right? Here there are only 2 liabilities and they have directly told that they have paid in full. So we will record it as to bank account. We will pay the liability in full. Clear? Next, the other item is realization expenses. So we have to record that realization expenses. So this here, only thing is that you have to remember or you have to understand how to prepare realization account. So other accounts are very easy to prepare if you know how to prepare realization account. Next, we are done with recording all the transactions here. Now we shall balance. So balance and the balancing figure would be either realization profit or realization loss, which has to be transferred to all the partners in their profit sharing ratio. Now, when you add all the debit side, you will get 42,920. That is total of debit side. So, coming to the credit side, so there is a difference of 740. So, we will record 42,920 both the side. Then 42,920 minus 2,400 minus 3,600, 11,180, 12,000, 13,000. So if you deduct, you will get 740 difference. Since debit side is more, so it is a debit balance, which means what? Realization loss. Suppose your credit side was more and debit side was less, it means what? Credit balance, so it is profit, realization profit. So in this problem, it is realization loss. So by loss transferred to, that is partner's capital account. So who are the partner here? Rekha and Chaitana. So what is the balance? 740 into their profit sharing ratio. So in the question they have given, they have agreed to share their profit and loss in the ratio 3:1. It's nothing but 3/4 as well as 1/4. So we'll distribute that loss 740 into 3/4. So we'll get 555. And Chaitana 740 into 1 divided by 4. So we'll get 185. So this is the realization account. Clear? Yes. Now moving on to partner's capital account. So Partners capital account is same as your admission as well as retirement. Clear? First what you will do, you will transfer the and your partner's capital account. Format is same. You will be having particulars on the debit side and the partner's name. Here Rekha and Chetana are two partners. And coming to the credit side, we are having particulars Rekha and Chetana. First what you will do, you will transfer the capital of the partner. As usual, you will transfer the capital of the partner. Now go through the balance sheet here. Now in the balance sheet, they have given capital of Rekha and Chetana. So how do you record? So in your partner's capital account, as usual, you will record it as by balance brought down. By balance brought down, Rekha 22,000, Chetana 13,600. Clear? First we will transfer the capital. Next, we have prepared realization account and we have a balancing figure of realization loss. So since it is there in the credit side, it is a loss, we will transfer to the debit side of partners capital account as to realization account, that is loss, Rekha 555 and Chetana 185. Now, after recording these two, we have to check our realization account. If any account which is transferred to partner's capital account. Now, who are the partners here? Rekha as well as Chetana. Now, we shall see whether any transaction in realization account has been transferred to their capital account, that is Rekha's capital account as well as Chetana's capital account. Now we shall see the debit side. So there is no account which has been transferred to partner's capital account. Now coming to the credit side, here there is by Rekha's capital account. So how do you record in your partner's capital account? We'll record it as to realization account. So by Rekha's capital account as well as by Chetana's capital account, you can write it individually to realization account, and in Rekha's column you can write it as 13,000 and Chetana's capital account, no, by Rekha's capital account individually you can write it as 12,000 in Rekha's column, as well as in Chetana's capital account you can write it as to realization account 13,000. Or you can combine the entry and write. So here how they have written to realization account, that is partner's capital account. They have certain amount or they have transferred certain amount to partner's capital account, right? So we'll record it as to realization account for asset taken over, that is 12,000 in Rekha's and Chetana 13,000. So this is a same entry, that is Rekha's capital account 12,000, Chetana's 13,000. So we'll record it as to realization account 12,000 as well as 13,000. Next, we shall see whether any transaction which have transferred to partner's capital account in our realization account, no transaction. So we shall balance our partner's capital account. So how to balance our partner's capital account? So we shall add debit side as well as credit side. Now we shall add that of debit side of Rekha, that is 12,000 plus 555. So we will get 12,555. Whereas coming to the credit side, we are having 22,000 here. So credit side is more. So we will write 22,000 both the side minus 12,555. So we will get 9,445. Now what is this 9,445? It is a balancing figure. So since we are not preparing balance sheet, so we are not carrying or carried down, or we are not carrying forward this amount to the balance sheet, so, because we are not preparing balance sheet, right? So we have to make payment. So what for where we are going to transfer this amount? So we'll transfer to bank account, to bank account. So what is this balancing figure? So this is the only difference when compared to admission of a partner, where you are going to prepare partner's capital account, but you are going to carry down that amount. Here you are going to pay that amount to the individual partner. So we will record it as to bank account 9,445. In the same way that of Chetana, so we shall add debit side 13,000 plus 185. So we will get 13,185. Coming to the credit side, we are having 13,600. Now credit side is more, 13,600, we'll write both the side minus 13,185. So we'll get a difference of 415, that is balancing figure, so we'll transfer to bank account. So we had already written to bank account, we'll write the amount. So this is a very easy partner's capital account. Only thing is that first you have to transfer the capital of the partner, which is given in the balance sheet as by balance brought on. After that, realization profit as well as realization loss. So after that, you have to check whether there is any reserve fund, profit and loss account as usual. So if there is any reserve fund as well as profit and loss account in your balance sheet, you will transfer to partner's capital account in their profit sharing ratio. So in this problem, it was not there. So leave that. Next is, what you have to do, you have to see your realization account and you have to find whether they have transferred any account to partner's capital account. So if so, you have to record that. Next, you have to balance, and your balancing figure has to be transferred to cash or bank account. In this problem, you have transferred to bank account because bank is given in the balance sheet. Now moving on to the last account, that is bank account. Suppose they have given cash account in your old balance sheet, then you will prepare cash account. In this problem, they have given bank account, so you are going to prepare bank account. Now how to begin a bank account? So first we'll begin a bank account, and you know the format. You will be having debit side as well as credit side, and the debit side particulars, amount, and the credit side particulars and amount. Now how to begin a bank account? Now see the old balance sheet. That is question. So we have not recorded this cash at bank anywhere in the problem, not in realization account nor in partner's capital account. So now we have to take this cash at bank while preparing bank account. So we'll record it as to balance brought down 5,000 in a bank account. That is to balance brought down 5,000. Clear? Where did we get this? In the asset side of the balance sheet. After that, now what you have to do, we have to see our realization account as well as partner's capital account if there is any transaction which has transferred to this bank account. Now we shall go through realization account first. Here under realization account, now see here under the credit side, here there is by bank account. Now how do you record in your bank account? We'll record it as to realization account because your entry is bank account debit to realization account. So how much amount you will write? You will write amount 11,180 because this much you have transferred to bank account, right? That is stock plus furniture. So this much you have recorded to bank account. So we will record it as to realization account 11,180. That is for what? For selling of asset. That is to realization account, assets realized 11,180. Now coming to the realization account again, we shall see whether there is any transaction which has been transferred to bank account. So under the credit side we had only one, we have transferred. Next coming to the debit side. So under debit side we are having two bank account here. So how do you record there in bank account? We will record it as by realization account. So your entry will be realization account debit to bank account. So we will record it as by realization account and the amount is how much? 6,000. Now we shall see how we have recorded. It is by realization account. Why we have recorded this? For payment of liability. Here for assets realized and for in the credit side for payment of liability, that is 6,000. Next, coming to the realization account, we shall see whether there is any other bank account. Yes, here there is a bank account. So what is the entry? Realization account debit to bank account. So how do you record in your bank account? By realization account for what? Realization expenses. And my dear students, you have to be very careful because this realization account comes often and often in your bank account. So you have to record why this transaction have taken place. So if you record in the or if you write in the bracket, so it will be very easy to recognize why we have recorded that transaction. Now here also we have recorded by realization account for liabilities paid off. Again we are recording for realization expenses. So make sure that you will write in the bracket so that there will be a clarity in your answer. Now we have written it as by realization account again for realization expenses 320. Now we are done with realization account. There is no more bank account. Now coming to partner's capital account. So under the credit side there is no bank account. Coming to the debit side. So here there is bank account, right? So what is the entry? Partners capital account debit to bank account. So how do you record in your bank account? We'll record it as by partners capital account. Since there are two partners, so we'll write the name of that partner. Now we shall see how we have recorded. So we have recorded it as by Rekha's capital account. Individually we have to write the amount. By Rekha's capital account 9,445. By Chetana's capital account 450. Clear? Now we are done with recording all the transaction and your bank account should be equal. That is, the total of debit side should be equal to total of credit side. So when you add 5,000 plus 11,180, so you'll get 16,180. In the same way, credit side 6,000 plus 320 plus 9,445 plus 415, so you'll get 16,180. Clear? So this is a simple problem which is very easy to score 12 marks. Only thing is that you have to be very careful while recording or while preparing realization account. So if you prepare realization account or if you know how to prepare realization account, it is very easy to prepare partners capital account as well as bank or cash account. And here we are not having balance sheet because we are not going to continue the business further. So we will prepare bank account and will make the payment. Here your total of debit side should be equal to total of credit side. My dear students, in today's session, we had solved a 12 marks problem that is very important from the examination point of view. So we learned how we are going to prepare realization account, partners capital account as well as cash or bank account. In my next session, I am going to continue with 12 marks problem. We shall solve few more problems so that it will be very easy to understand. See you all in my next session. Till then, take care. Thank you.